Okay, let's get started. Ladies and gentlemen, very happy to introduce Martyn Wade, who is the CEO of Grindrod Shipping. Martyn, I think it's for many of us in this room, maybe a less well-known name. So I'd be very happy if you could give a short introduction and a little bit of the history of the company and some of the recent developments that are of interest.
Thank you, Ted. Thank you, everyone. A little bit of background, been in the business 40 years, worked all over the world, London, Johannesburg, New York, and now Singapore, owners, operators, brokers. I joined Grindrod 10 years ago, set up their operating division, and that was when Grindrod, through the good times in the market, made a lot of money. Old-fashioned South African owner, 108 years, trading on the coast, cement carriers, car carriers, all small stuff. Got into the tanker market some 55 years ago, into the dry side full-time towards the end of the 90s with the purchase of Island View. And with the money that was made, they rightly decided to invest it in non-shipping, so more landside logistics infrastructure. But of course, in the process, became a conglomerate. And as we went forward, people wanted to buy shares in a shipping company. They wouldn't buy Grindrod because, of course, there were other aspects. So the decision was taken at the end of 2016 that shipping really should have its own platform, own listing, to make us independent, small shipping board, and to put ourselves on the market here in order to pursue a growth strategy. And we duly listed. It was a spin-off in June. So every shareholder in Grindrod Limited got a share in Grindrod Shipping on day one. And now I'm into the markets and trying to get our story out there.
Tell us a little bit about your main shipping businesses and commercial strategies.
We're in two sectors, which of course, from a market perspective, can be construed as difficult to understand. The MR tanker side, we have Handys and MR tankers, 15, and some 16.5 easy chems. On the dry side, we have 36 Handys from 28 to 37. And 58 to 60s, supers and ultras. So we're very much focused. On the tanker side, we're tonnage providers. We have a joint venture with Vitol. We run ships in the Maersk pool. On the dry side, we, over 40 years, are a long-established operator, 40-year relationships with major companies, evergreen contracts. We use the business for our own ships, and also we charter in third-party ships to enhance. So we're a fully fledged owner-operator, managing all the ships, technically and commercially, ourselves in-house. And we trade all over the world. Very strategic. We've come out of South Africa, the Indian Ocean. It's a relationship business in this market. People trust, you earn the trust of people, and people will do business with you.
Can you go a little bit further into the commercial side on dry bulk and maybe elaborate a little bit more deeply on the difference between being an operator as opposed to a tonnage provider?
It's interesting, but we view an operator, basically we operate the ships ourselves, as I say, technically, commercially, which means we fix them on the market. But also, we have extensive contracts. We have some 40-year evergreen contracts with some major mining houses. And around that, we will triangulate our ships to add value and at times keep them away from the market, so kind of not susceptible to spot market earnings and to value add. We're very focused on the dry side with only Japanese fleet, modern eco fleet. And it goes to relationships. So you have quality contracts where people want quality owners with quality ships. So it's a very, very focused business.
The Japanese connection is interesting, and at least in my experience, is a very valuable connection for a ship owner to have. Could you go into that a little bit more deeply? Because I think it goes beyond just building ships in Japan.
Yeah, we do love Japan. We've been there over 25 years, and it's all about trust. And yes, I have drunk a lot of sake and sung a lot of karaoke over the years. It's inevitable what you do. We actually had a Japanese bank approached us the other day and said, can they talk to us for financing, because they watched us for 20 years and liked our performance. So for us, they build the best ships. It is all about relationships. Once you're in Japan, you get the trust. We've never renegotiated, never reneged on anything, and in return, you get some interesting deals. It's all about trust.
Right, right. So in that respect, the deals are kind of the long-term charter-in type of arrangements, which allow you to have more capacity, but not necessarily having the same capital invested.
Long-term charters, also where the yards will come to you with. We've done a couple. It was in our Form 20F, a couple of well-priced Ultramax new buildings where it's a relationship, and at times you support them, and every now and then you get a sweetheart deal back. But you do have access. The Japanese trust very few people, and we jealously guard that relationship.
Yeah. Well done. Well done. There's been recent weakness in the dry bulk stocks. Some attribute that to the trade tensions, the trade war, whatever term you want to use to describe it. What's your view on that? And going further, kind of in particular, what are you seeing trade route-wise, commodity-wise, vessel utilization-wise, a little bit more?
Yeah, the trade war, it's we have an unstoppable object hitting an immovable object. So by definition, one of them is wrong. I thought, to be honest, it would have been resolved by now. It seems to be getting worse. From a dry cargo perspective, the commodity that's going to affect us and basically only on the smaller sizes up to Panamax is soybeans. And we're starting to see now that in the first month of American soybean sales, first month was down 23%, some 900,000 tons down. Forward sales are off 11% already year on year. So this is starting to become a concern, and there's been a lot of talk about Europe importing more soybean, and of course South American countries importing. It's small fry. In reality, if they're talking now maybe 20 million tons of soybean don't move, it's going to make it a very difficult potentially end to the year to what is looking a very good dry cargo market. So it's a concern. Mm-hmm. But of course, from other ship types, coal, iron ore, it has no effect. It really is the soybean, and that for us is a huge trade generally on this segment, because it's also long-haul trade from America to China.
Right. Thank you. How about the product tankers? You said there you have relationships with a few of the large players in the market. How would you describe your profile in that sector, and what's your outlook there? It's been obviously under considerable pressure.
Yeah, we've always been tonnage providers over the years. The original unicorn Grindrod, South African oil majors would come to us, want a ship, we go to Japan or Korea, build it for them, put it on charter, and that was the deal. These days, of course, oil majors put their older ships on markets, and also you have the three traders. So our business model has changed to a big degree where we are tonnage providers. Tanker market, is it where dry cargo was 2.5 years ago? It's disastrous, but going forward, we see a lot of potential. IMO 2020, the low sulfur, the MGO, it's going to be produced in Middle East, Far Eastern refineries. It's going to have to be shipped around the world, especially to the Atlantic. Is there going to be floating storage? So we're very hopeful, and of course, slow steaming. But I think for us, I think the next 12 months is literally to survive through this market. It's brutal. We saw it on the tanker side. It is healthy. But it's tough, very tough.
How would you, in assessing Grindrod's position relative to the other publicly traded peers, how would you assess that?
Well, obviously, for us, it's been a very tough start with the share price. We're under half of where we listed at. There are reasons. We've had some natural sellers within South Africa that were invested in our parent company at the time for African infrastructure and emerging markets. And there's been one major seller out there which we've now identified, and we're in the process of discussing with them placing those shares in hands of investors over here. But I think the whole market generally, it's not specific. Everyone is off, and I think we need all shipping stocks to rise. From NAV perspective, we're obviously having a lot of meetings, and I think people are wondering, did we get our pricing wrong, or is there a disconnect? And it is tough, but we would like to think that if we can get these four sellers, at least get them sorted out, and then we can go forward. But I think the market generally, we need all shipping stocks to be feeling good at the moment, and we need the market to help.
And what about, say in the near term, 6, 12, 18 months, investment opportunities? How do you look at that?
It's an interesting one because obviously you don't want to chase the market. We see on the dry side still some potentially interesting deals out there from Japan. There are some resales, some second-hand. It's all relative to price. We're also potentially discussing people, ships for shares, basis NAV. So there are people that want to do deals. On the tanker side, maybe some interesting deals, but again, from the tanker side, if we were to invest, we'd have to do it in conjunction with one of our partners. So we will see what happens. But for us, I think our growth will be on the dry side, and we still see some possibilities without going berserk.
Let's not go berserk.
No, we don't need any more ships ordered. Yeah.
So maybe you touched on it a little bit, but how do you see going about re-energizing the share price? Obviously, that's critical.
Yeah, I would say we have one or two natural sellers which we're engaging with. We are now a share buyback program has been approved as well, but also we're looking to simplify our structure. We have a lot of joint ventures, both on the dry and the tanker side, which, when we were part of Grindrod, was all part of the strategy, whereby off-balance sheet, partnering other people. We appreciate that for the market here that this doesn't work, so we have to kind of tidy up those joint ventures and make it a far more simpler process. And we'd like to think that in 12, 18 months from now, it'll be a far easier company to understand. But we do appreciate that we've come to market with not the most optimal structure.
I've seen in some of your presentations some of the comparisons you make towards industry benchmarks, particularly on the dry bulk side, earnings-wise. Maybe it's back to some of the discussion we had a few moments ago on your commercial strategy and position, but could you speak a little bit further on the company's performance in that respect?
Yeah, as I say, we're owners, operators of ships, so obviously we benchmark ourselves against some of our peers, but also against the indices, the Baltic Handy Index and the Baltic Supermax 58 Index. And the guys are set up to beat that. It's remarkably difficult to do on a consistent basis and steadily outperform, but we find that by using a combination of cargo and quality ships, you can make above market. But it gets more difficult, of course, in the modern world with Adrian here and vesselvalue.com. There are no secrets anymore in the world. Everyone knows where everyone's trading. So it does get harder. But we still believe that with a quality fleet and relationships that people will pay a premium for the right counterparty. And it's a lot of hard work, but that's what we target.
Give the audience a sense of the scope of your operation in terms of personnel, offices. What are the key locations?
The head office is Singapore. We have 61 people in Singapore. We've been there since 2004. We deliberately domiciled ourselves there. The Singapore government, full support. We're the only Asian, or Singapore-based, even Asian-based company quoted on a New York exchange. We like the transparency. Governance, we've nothing to hide. We have no third-party related transactions. We have a big office in South Africa, 60-odd people, an office in Tokyo and London and Rotterdam. So staff-wise, we're about 150 shore-based staff. And from a trading perspective, I say we've evolved out of South Africa, Indian Ocean, and we trade internationally, but you also, for us, it's very important to have a core business that where the fleet, a percentage of the fleet can be employed with cover. And again, 30, 40-year relationships are to be cherished, and people, you don't throw them away just because the market changes and vice versa. So again, very targeted.
Long term.
Long term.
We're winding down, and to keep it on time, we'll say, to me, it's a new kid on the block, but a kid who's been around the block for many times. So welcome to New York. Good luck with getting that stock price up, and we look forward to continuing the conversation.
Thank you, Ted. Thank you, everyone. Thank you.
Thank you.
Thank you very much.